It's Thursday, the 13th of October, 2022. Welcome to the Fast Five by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, 5 stories in 5 minutes. Let's jump into it. Story number 1. This is an interesting one. Bank stocks surged yesterday, and mostly it was actually because one of the tiddlers in the sector, Bank of Queensland, showed the profit margins among lenders are on the rise thanks to higher interest rates.
Banks are supposed to do well when interest rates are rising, but fears of a slowdown or possible recession have overwhelmed investor sentiment about the sector. But yesterday, things changed. Westpac share price was up nearly 4%, ANZ rose 3.3%, Commonwealth Bank was up nearly 2.5%, National Australia Bank up over 1%. It was because Bank of Queensland released its profit result. Now, its share price jumped 11% on the back of a 15% jump in earnings, but it was all about net interest margins. The Brisbane-based bank said home loan growth had come back, but net interest margins, broadly the difference between what the bank pays on deposits and receives on loans, had jumped during the fourth quarter. That's all important because that's how the banks make money. So the share prices of the other banks surged. Just before we leave this story also, Commonwealth Bank held its AGM yesterday. CEO Matt Comyn said he expected another 25 basis point increase in interest rates next month. He also was pretty confident about the outlook for the Australian economy.
All right, on to story number 2, Sean, and this one will come as no surprise really to anyone who has been looking for a rental lately, but a new report shows that house and unit rents have reached a record high across the capital cities.
That's right, across capital cities, house rents are up nearly 13% over the past year, according to online property group Domain, and unit rents are up 17%. Unit rents are still rising at a faster pace, quite incredible. It's the highest annual growth on record and the 6th consecutive quarter of rising rents for houses and 5th for units. That's the longest continuous stretch of growth ever. Really bad news if you want to rent an apartment. Not so bad if you own an apartment, and certainly not so bad for the broader housing market, because once you have rising rents, you get investors more interested. Throw on top of that immigration that's picking up and will over the next couple of years. Those two things will combine to somewhat slow the fall in house prices.
Story number 3, Sean, Australia's Fat Cat and Fit Cat super funds have been revealed. This was from investment advisor StockSpot. They've ranked super funds, including fees and performance.
And a bunch of one-path funds, which used to be owned by ANZ but are now owned by Insignia Financial, are among the worst performers, while the Qantas Corporate Fund is the best. As is usual, retail funds dominate StockSpot's list of Fat Cat funds, high fees with relatively poor performance. Apart from one-path funds from AMP, Colonial First State and Clearview performed poorly. In the Fit Cat category, Qantas came out on top, and UniSuper, Hester, Australian Super and an Insignia Financial Fund also were on that list. If you have a super fund, and most of us do, you should go to it, StockSpot, and check out how your fund did.
Okay, story number 4, a bit of good news, Sean. Almost 200,000 people who spent years fighting to clear welfare debts that they didn't actually owe will have any active Centrelink investigations wiped.
The federal government will scrap the cases of robo-debt victims still under review, with any potential debt no longer being pursued, according to the Financial Review. The unlawful debt recovery scheme started back in 2015 and falsely accused welfare recipients of owing money to the government. More than $750 million was wrongfully recovered from 381,000 people. The cases were put on hold in 2019 after concerns were raised about the robo-debt scheme. Social Services Minister Amanda Rishworth said clearing the outstanding cases would offer certainty to any Australians with reviews hanging over their heads. Fair enough. A royal commission into the robo-debt scheme is expected to begin at the end of this month.
Finally, Sean, story number 5, possibly the best story of the week. NASA's mission to nudge a distant asteroid off course has succeeded. We had to wait a couple of weeks to find this out, showcasing a potential new method for saving Earth from dangerous space rocks.
I love a story that's all about saving Earth, don't you?
Oh, we don't get to talk about saving Earth enough on Fear and Greed.
Not enough. The spacecraft, which is about the size of a refrigerator, slammed into an asteroid called Dimorphos at 14,000 miles per hour on September 26. Now, Dimorphos is roughly the size of a football stadium. Pretty good aim to get it at 14,000 miles per hour. The momentum from the impact, combined with the recoil of the ejected particles the collision created, helped to substantially alter Dimorphos' path through space. So now, if we think an asteroid is going to hit Earth, we know what to do.
We just send a fridge into space.
That's it.
That's it. The top 5 business stories in 5 minutes. Thank you, Sean.
Thank you, Michael.
It's Thursday, the 13th of October, 2022. Remember to hit follow and don't forget to check out our new podcast, How Do They Afford That? Featuring Canna Campbell, the founder of Sugar Mama TV, all about making your money work a little bit harder for you. There is a new episode out now, what to do when you're a saver but your partner is a spender. I'm Michael Thompson, and that was the Fast 5 by Fear and Greed. Have a great day.